So I think we're live.
We're live.
We're recording.
I think so. We are.
So without further ado, boys and girls, thanks for tuning in here again. So tonight's a very special episode. I got Angelo Marino with me. Angelo is the best by far. He's my personal mortgage broker, lender, whatever you want to call him. He's the best. He's going to explain a little bit tonight about what he does and really the problems and the concerns that most consumers have in the residential and commercial real estate market. We're trying to get a lender. It's a struggle, but he makes the process super easy, super efficient, always closes on time, never had an issue. I did like 12 to 15 properties with him. Always the best. So I'm going to turn it over to Angelo. So how you doing?
Good, Paul. Thanks. I appreciate the intro. That was awesome. And you know, Paul's a really good friend. I've known him for a long time as well too. We met in the business industry years ago. I mean, for like what, 30 years, probably almost.
30.
It's been a long time.
Oof. Yeah.
Nah, maybe 25.
It's still long.
It's been a while. Anyways,
so tell me a little bit about your company first off, and your role in the company. It's
absolutely.
important.
So a little bit about my role and my company. So I work for a company called Fairway Independent Mortgage. They're a large size retail mortgage lender, right? And we're licensed in every state. I do business primarily in Florida only, okay? But we do have offices throughout the country as well also. So if anybody's looking in other states and needs a lender, I can refer you over to somebody in another state. I primarily focus on Florida. I've been lending right now going on 21 years, and I never got out of the industry even during the bad times, right? So I started in 2001 in the mortgage business, actually 2003 in the mortgage industry, and been going strong ever since. So, Fairway Independent Mortgage, again, we're a direct lender, right? And we lend our own money. We close and fund on FHA, VA, conventional deals, right? We also have the option to broker loans as well, too, to specialty banks to do bank statement type of loans and DSCR loans and loans that we don't do in-house or we can't lend conventionally, right? So you're working with a direct lender and you're working with a broker all at the same time.
So first-time home buyers, no problem, obviously.
First-time home buyers, we specialize in working with first-time home buyers all the time. And believe it or not, a lot of people buying right now are first-time home buyers. And let me touch on that real quick. Reason being is that people that refinanced or bought homes during COVID have super, super low interest rates, right? They have rates in the 2s, 3s, mid-3s. I was locking loans at 2.75, 2.5. That was like free money at the end of the day, right? So all those people that bought homes during those times or refinanced their homes during those times, they're really not selling those properties, right? They're keeping them. If they're looking to upgrade, they're keeping those properties, renting them out if they can rent them, and then they're buying another primary home or a second home or an investment property, right? Because they don't want to lose those low rates.
Right.
If you put that loan next to a loan now, the payment's going to be much higher.
And that's the problem, especially in South Florida right now. Like I have friends who are moving down from New York. My neighbor's daughter, she's moving down from Philly.
Okay.
Great credit score, good down payments, good job. She can't. I mean, the price is ridiculous. She's trying to buy a house for $800,000. It's like a dump, and especially in Boca.
Right.
And her payment's like buying a house for $1.5. So how do they avoid that? Like, what can they do to just buy a better property, a cheaper property, or is it programs like a lower the payment because she's like at $10,000 a month on just a dump? She doesn't want to do it.
So the thing is, when you put the numbers in the calculator and you put where rates are currently right now, let's say you lock a loan at 7% right now, and you're buying a $600,000 house. We just did a loan locked at 6.75. It just closed last Thursday, and the payment was $5,200 a month. Principal, interest, taxes, insurance, and mortgage insurance. It was an FHA loan. They put 3.5% down. The buyers qualify. The income, they had enough income to support that payment. Plus, they had a couple other investment properties in Texas as well, too. So it worked out for them. The guy knows about real estate, and he knows that he'd rather pay a mortgage than rent at the end of the day.
Obviously, right.
So it was a no-brainer for him. And he said, you know what, if rates do come down, he'll say he might refi if rates do come down. But there's no guarantee that rates are going to come down, right? So going about first-time home buyers, we have plenty of first-time home buyer programs. The one that's really that sticks out the most in Florida right now is Hometown Heroes.
What is it called?
Hometown Heroes. What that is in a nutshell is that the state of Florida rolled out this program 2 years ago, and they said it was for firefighters, police officers, teachers, nurses, people in the service industry that help people, right?
The first responders.
The heroes out there, right? So they rolled out $100 million in July of 2022. And that money lasted all the way till like November of 2022, right? Almost December. And then it was all used up. It was $100 million. So what happened in 2023 is that DeSantis came out, Ron DeSantis, our governor, and said, we're going to open up this $100 million for everybody. It's still going to be called Hometown Heroes, but it's going to be opened up for anybody that's buying a house that's a first-time home buyer that makes under the certain income limit, right? And qualifies for the program, right? So they opened that up last year in July 1st. The money was gone by August 23rd.
Wow.
$100 million gone. Reserved, used up, gone.
Wow.
Now, once the money's reserved, if a contract falls out or something, you got to keep checking the website. We can do that for you as well, just to see if any money does come up. Now, this year, they're doing the same thing again in 2024. July 1st, they're rolling out another $100 million.
Wow.
And it's up to 5% of your purchase price that the state will give you to help you get into the property.
So that's coming up this July.
July 1st, coming up. Yep.
So everybody looking really needs to start getting pre-qualified now so they can take advantage of it for first-time home buying.
Correct, 100%. Or if you haven't owned a home in the last 3 years. And if you're buying a house, let's say a boyfriend and girlfriend are buying a house, if one of them is a first-time home buyer, we can still do it.
Really?
Yeah. So
And both of them are on loan?
And both of them are on a loan. They can still do it. So there's some really cool guidelines, and it's not for everybody. Like I was talking to somebody, she's a nurse at Cleveland Clinic, and at the end of the day, she's got 20% to put down. If you put it next to a conventional loan, it really doesn't work for her, right? So it's not a loan for everybody, but it's good to see if you fit in the criteria. And if you're short on down payment and closing costs, it's great because it helps you get into the property. So what it is, it's if you're buying a $500,000 house, $500,000 purchase price, the state will give you 5% of your purchase price towards down payment or closing costs. So you're going to get $25,000 from the state.
Just as a gift?
No, it's not a gift. It's a 0% loan, right? So if you refinance or sell the property, you have to pay it back. If you
refinance or sell the property, you have to pay that 5% that the state gave you back.
Correct.
In full? Or is
in full.
So is it amortized into the loan at all or no?
No, it's a completely separate lien on the property.
So what happens if you never ever sell the property?
In 30 years, you'll owe the money.
You'll owe what you borrowed?
Correct.
No
it's
interest?
0%, right.
Oh my God, that's great.
Yeah, so it helps you get into the property.
How do I do that? I want to do that.
You need to be a first-time home buyer.
Oh.
Right.
Well, that doesn't work too well for me then.
Right. Well, yeah, it's like I said, it's not for everybody, but it's a great program to get you into a property, right? So back when Obama was president, he was giving people and he took presidency right after the housing crash or during the housing crash, right? He was giving out $8,000 grants to first-time home buyers. My brother got one when he bought his townhouse. Free money right at the end of the day.
Wow.
Yeah. So this is a state program. This is through Florida Housing.
So it's only in Florida right now?
Correct. Only in Florida through the entire state of Florida. And what's good about it is that Fairway, us at our office, we're a direct lender with Florida Housing. We underwrite the file. We fund the deal. We reserve the funds for you. We have a great reputation with Florida Housing. We're one of the top lenders with Florida Housing. Not every mortgage broker or lender is signed up with them, or they will not take everybody to do business with them. So it's very important. You might speak to a mortgage guy, and he might not even have that program available for you. He might not bring it up. There are some other really good grant programs as well, too, through the state of Florida. There's 3 or 4 other ones. There's a bond program. So there are some really good programs for first-time home buyers. So I encourage everybody to make a call. We also have another program with Chase as well, too, which we're exclusive with Chase on this deal. And I just locked somebody at 6.5 with like half a point discount through Chase. It was amazing, right? So the address that they're buying has to fall in that criteria level. So we have some really good stuff. And what we do is like...
Well, wait, let me just touch on the first-time home buyers. There's a question. I know a lot of people be interested in this, and I am. So the Hometown Heroes, right? That's what it's called?
Right, Hometown Heroes, yep.
The Hometown Hero Assistance.
Down payment assistance.
So they're going to give you 5% down payment. Is that now suffice your down payment money? You don't have to come up with any more for down payment? Or do you have to add to that?
So let's say you got 5% from the state, right?
Right.
and you had another 5% for closing costs. You had money put aside for closing costs. All you would have to come to the closing with is your closing costs, not the down payment.
So that down payment actually works as just down payment, where you don't have to show any money in the bank for that. What happens if you have, let's say, easy numbers? I don't know. Let's just make believe.
Right.
Let's say there's, what, 20%, 20,000 down would be 5% on something?
20,000 down would be 5% on a $400,000 purchase.
Okay, so let's say I'm buying a $400,000 home.
Okay. Putting down 20 grand.
Putting down 20 grand
Right.
is 5%.
Right.
But I don't have the 20 grand to put down. I only have 10,000 in my bank to cover closing costs.
Okay.
I could take the state's hometown hero down payment, use that to pay the down payment, and the only money I have in my bank would cover the closing costs and some reserves maybe,
Correct.
and that'll fly?
Correct.
Wow. So everybody has to do that.
100%. You're crazy not to apply.
But so there would be some first-time home buyers that are going to go apply for a loan and not take advantage of that because they just don't know, or the lender doesn't know about it?
Correct. Like Chase Bank, and nothing against the bank, right? But they don't have this program. They don't offer it out to their borrowers.
Wow.
Here, this is really cool. I just did a deal in Pinellas County, up in like the Clearwater area, Tampa area, right?
Yep.
She was a nurse. She calls me over the weekend. She was referred from an agent up there, a realtor. She wasn't making any headway with the other lender that she was working with, right? She calls me up. This nurse, right? She qualifies for the bond program, the Florida bond, not Hometown Heroes. She qualified for the Florida bond program. Everything worked out for her. We got her a 3% of her purchase price for down payment. She put 3% down, right? Mm-hmm. She had money in the bank, but we got a $13,000 seller credit from the seller. So we got 3% from the state, $13,000 from the seller. Her total cash to get into the property was $2,500.
And how much was the property?
$380,000.
So she bought the property $2,500
out of pocket.
Wow.
In the deal. She took money out of her 401k because she thought she was going to need a little bit more money for closing, and she just didn't because the numbers worked out in her favor. So that seller concession really helped out pay for closing costs.
And who had, with the realtors negotiating the seller credit?
Correct. We negotiated the seller credit up front.
Wow.
Up front. So down payment was covered. Closing costs covered. She got in the property, $2,500. She was happy. She didn't even think she could buy a house. She didn't even think she could qualify.
First-time home buyer.
First-time home buyer. I approved her. She was approved on a Saturday. Pre-approval letter went out on a Saturday or Friday. Apologize. She was in contract Saturday. We closed 25 days later. She's in her house. Yeah. She's happy.
That's great.
She's a homeowner. She got her keys.
So on the flip side of the first-time home buyer, let's talk about somebody like myself who wants to buy another property.
Right.
Maybe second home, maybe an investment. Let's look at investment because that's probably where most of the people go over second home, unless they really buying as investment, calling second home. But let's look at investment properties. I want to buy another property, and that DSCR loan that you mentioned is something that I would do because maybe I don't qualify for whatever reason for another property.
So let's back up a sec. DSCR stands for debt service coverage ratio. Okay. Mm-hmm. So how this loan works in a nutshell, okay, is that the payment, the total payment of the property, the total expenses, principal, interest, taxes, and insurance, they have to be at what that property could rent at a market value or below.
Okay.
Okay. So let's say you want to buy a house and you could rent it for $5,000 a month.
Who establishes that rent?
The appraiser.
The appraiser from where?
So when the appraisal is ordered, when the appraiser goes out to the property, we order what's called a rent schedule. It's an extra fee when you order an investment property appraisal. That rent schedule is going to go off to see what the market rents are in the area. Now, if that property is currently rented, they're going to ask that tenant when they go out there what they're paying in rent, right? And if let's say the rents are off and they're getting a deal, they're still going to show they're going to verify what the current market rents are. So let's say that mortgage payment's $5,000 a month, right? Okay, and you're getting $5,000 a month rent back on the rent schedule when the appraisal comes back, right, from the appraiser. That covers the debt service coverage ratio. $5,000 payment, $5,000 in rent. It's an even wash, right?
So that you qualify.
You qualify. The property qualifies.
Property qualifies.
Right. You also have to qualify based on credit score as well, too. And
just credit score.
Just credit score.
No bank statements.
Well, you have to show your down payment and closing costs and reserves.
All right, so you have to prove down payment money, closing costs, and reserves in the bank.
And reserves in the bank. Yep.
But you don't have to. You don't take that $5,000 monthly payment into your debt to income ratio.
No, because it goes off the property.
Right.
It's based on the property. So let's say
So that wipes it out.
right. So let's say hypothetically the property rents for $5,500 a month, right? And your mortgage payment's $5,000 a month. You have a $500 profit. You're still fine. You're fine. There's no issues there for qualifying on that property.
Right.
Right. Let's say your mortgage payment. Let's say the rent comes in at $4,500 and you have a $5,000 mortgage payment. You're short.
Right.
Right. You're at a less than a 1 DSCR. Now what we can do is we can put it in the computer and we can go to a 70, less than a 70, greater than a 75% DSCR. So we have to figure out what the math is. So 4,500 still may work. But if you have a huge shortfall on your rent compared to what your mortgage payment is, you're going to have an issue.
So if the mortgage payment is, let's say the mortgage payment is on this investment property is $4,500, and the rent's $5,000, I'm good.
Correct.
Okay. Let's say my rent is $4,500, right? Just to repeat what you said.
Understood.
So $4,500 a month is my rental income, and my monthly payment is $5,000. Do I have to carry that $500 on my debt to income to qualify, or how does that work?
So there's something called the debt service coverage ratio calculator, right?
And that's what you were just talking about.
So we need to put those numbers into the calculator. If we're above 0.75, we can still do it. There might be a little bit of a hit to the rate because we're under the 1%. So when you look at financing a commercial property, everything goes off debt service at the end of the day. This is kind of the same type
residential,
similar qualifying parameter just on a residential property.
So
it's very easy to figure out. It's a matter of, I'll throw it on the board in this video, and we can see what that $4,500 looks like compared to that $5,000 a month mortgage payment, and see.
So
if
the $4,500 to the $5,000 is still that calculator. The formula has nothing to do with me as a borrower.
Correct.
It's still just off that property.
Property related at the end of the day.
Interesting.
Yeah. So that's why those loans work, right? So I'm doing a DSCR loan right now for. She works for the sheriff's office. She's got a bunch of rental properties, right? She owns a property free and clear. She's taking $250,000 out of an investment property. She's renting the property currently for $2,800 a month. She's taking out $250. Her PITI, principal, interest, tax, insurance, all in. Her expenses on the property are $2,500 a month. She still has $300 a month in positive cash flow on that property from a DSCR standpoint. Okay. So DSCR is not conventional financing. It's not Fannie Mae financing. It's like hybrid Alt-A type of financing. But it's good that these banks came out with this type of financing because their portfolio is healthy. People are making their mortgage payments right now. There's not a lot of delinquencies on these loans. So
yeah, lending's tight.
Right. But it's out of Fannie Mae's box, but it's good that there's other options out there. And these are options, too, for self-employed borrowers that don't show money on their tax returns. There's bank statement loans. You can either show 12 months of business bank statements to qualify, 12 months of personal bank statements to qualify, 24 months of business bank statements, or 24 months of personal bank statements. So let's say there's an Uber driver, and he puts all his money in his personal bank account, and he's driving 24/7, this guy. But, he's not, he's got a lot of expenses, right? He's got his car insurance, maintenance, et cetera, et cetera. Probably not showing a lot on his tax returns. That type of borrower can do a 24-month business bank statement loan or personal bank statement loan as a sole proprietor. And as long as he's putting all his Uber money in one account, it's easy to track that way. And we can qualify him based off his deposits.
12 months.
12 months or 24 months. But he's got to be self-employed for 2 years.
So if you're self-employed for 2 years, you may go back only 12 months of bank statements.
Correct.
Of just the deposits.
Correct. So what we do is we take all their bank statements and we send them to the actual bank we're going to broker that loan through, and they figure out their calculations. They do like a pre-underwrite on the file. So it works out really well. So going back to like a first-time home buyer, I just want to talk a little bit about what the pre-approval process looks like when I speak to a client, right? So let's say a real estate agent refers a buyer over, or a title company refers somebody over, or an attorney or CPA, or any of my professional network and my referral partners call me and say, hey, Maria wants to buy a house. Someone needs to help her right away. She talked to a couple of people and she's not getting anywhere, or she really wants to put an offer in on this property, right? So she's under a fire drill. She wants to go fast. She wants to make a move right away. I'll immediately drop what I'm doing, or somebody on my team, because I have a full team, right? I have a loan partner. I have a full-time processor, full-time underwriters on the team as well also. Somebody will drop what they're doing and call that client right away. We're going to have probably a 30-minute phone conversation on the phone and ask them some basic questions. What their goals and needs are, what type of property.
You are or your assistant?
Me or my assistant or somebody on my team.
Mm-hmm.
If I'm busy at the moment, somebody on the team is going to call that borrower right away to get them going so they can start the approval process. So we're going to reach out to them. We're going to ask them some simple questions over the phone. Are they buying a primary home? Do they own any other real estate? When's the last time they looked at their credit score, right? What they think their credit score is. Are they working? What their job history looks like. Are they in school, et cetera, right? We're going to ask them about their assets, where they're getting their down payment and closing costs from. We're going to ask them a bunch of questions, and we're going to take notes, right? After we get off the phone with them, we're going to send them a link, and we're going to send them a text also where they can digitally do a loan application. Some people log in right away and start the application, right? Once that application, they push the submit button, that application comes into our system. We're alerted with bells and whistles that application came in. We start working on it immediately right away.
Pulling credit?
Right away. Right away.
Is that during the application? Do they approve to pull credit?
Correct. Yeah. So they check yes if they want their credit pulled. Most people applying for a mortgage, we have to pull the credit, right?
Obviously.
At the end of the day. And it's just one credit pull through Equifax, TransUnion, and Experience, a tri-merge. Once we pull the credit, get the file in, immediately emails are going out to the client requesting documentation. If they're a self-employed borrower, we're going to request documentation for self-employed borrower, 2 years of tax returns. We're going to request the driver's license, bank statements, business and personal tax returns. Everything's pertinent for them buying a property, right? Same with the W-2 borrower. W-2s for the last 2 years,
right?
Bank statements, copy of driver's license. If they own any other real estate, we're going to need all the details on the other real estate that they own as well also. So we're going to kind of like just look at their file when it comes in and kind of put a custom needs list together for them, exactly what they need to send over to us. Once they send that information over to us, the ball's back in their court at that point. Once they send that information over to us, then the ball's back in our court. It's like a volley back and forth. It's up to us to review that as quickly as possible, right? We can underwrite basically the entire loan from the beginning and look at everything in the beginning to see if that client qualifies for that subject property that they're looking to buy.
So they have to have a subject property at the time?
Well, they have to have an idea of how much they're going to spend, right?
Okay.
But sometimes people are like, let's go back to the case study, Maria. They call in. She's got a property in mind. She wants to make an offer on it today. If they can do the application, get us all the documents, we can get a pre-approval out right away, go over numbers. They can put an offer in by that evening if they need to be. So we can move as fast as the client can get us the documents back at the end of the day. Once we do our review, then we send the pre-approval letter out. We go over the numbers. The realtor's made aware, the referral partner, whoever referred the deal over to us, is made aware of where we're at with everything, and then we move the deal forward. And then they start negotiating an offer with the realtors.
So they're pre-approved. Now, obviously, I know this, but just for everybody else who may be interested and not know this. So you start the process. You may have a subject property in line, but you're not in contract.
Correct.
So you're not in contract, but you have an idea of what you think you want to buy.
Right.
So you're going to get them pre-approved at that point without that subject property. Just an idea.
Correct.
So then you go through the pre-approval steps, and then all of a sudden you issue them a pre-approval letter that's pretty much guaranteed because you reviewed everything.
Right.
So it's not back in the day where somebody says, oh, I just want to buy this $400,000, $500,000, $900,000, $2 million home, and the lender says you're pre-approved, and then come at the end of the day, they're not.
Right.
And then it's going to blow up anyways because everybody's really full of shit at that point.
Right.
So you're going to do a real approval, pre-approval, based on the information that they send you in black and white.
Correct.
Issue that pre-qual. They give it to the realtor, and now the realtor knows, and obviously, but if you're looking to buy a house, you have to have a pre-approval because it's a stronger offer.
Correct.
So now they have that. What happens if you pre-approve them at $400,000? Let's say, I mean, we keep saying $400,000, but realistically, down here, that's probably not going to happen.
Townhouse condo, maybe that price.
$600,000. Like, what do you think the basic?
A single
Like,
family.
if he's going to go buy a house right now,
6.25.
that's That's crazy. So let's say 700,000 first-time home buyer,
Right.
right?
Mm-hmm.
Wow, 700,000.
Let's go back to Hometown Heroes. You can get 5%
Yeah.
from the state. So you get $35,000 for your down payment.
That's crazy. That's great. So first-time home buyer, $700,000 on average.
Give or take. I mean, it depends on what neighborhood you want to be
So
in.
are you taking the Hometown Hero down payment into consideration? Or do they have to qualify that separately?
We are, and there are different parameters for Hometown Heroes at the end of the day. So going back to, let's say, Maria's pre-approval, that's our subject example, right?
Yep.
So pre-approval, it's important to talk about this. Some banks, lenders won't ask for documents. They'll go off what the borrower puts in the loan application,
Which is
the 1003, the IRLA 1003.
probably incorrect anyways.
Right. So let's say you think you make $6,000 a month, but you really don't, right? At the end of the day, you think you make $72,000 a year,
Right.
but you don't, right? So because the pay stubs and the W-2s are going to really tell the story. So some people...
So most people, not to cut you off, but
Right.
most people think they make something where for qualifying, it's probably not accurate because they don't know how the real steps to qualify for that money.
Correct, because some people will think that their bonus, overtime, commission just get lumped into their monthly amount.
Right.
And it doesn't work that way. Your base salary is your base. If you make overtime, commission, extra work, any type of extra hours, right? That's going to get averaged over your year to date and your previous 2 years.
Yeah. So it's a whole process that most buyers, especially first-time home buyers, don't really know. That's why they need to call you.
Correct.
And discuss that right up front to figure out, hey, you think you're going to buy a $700,000 home, but you can't. You
Right.
could only qualify for $500,000.
Right. Calculating income is the most important, one of the most important things that the loan officer and team needs to do up front properly.
I agree.
Properly. So going back to other banks and mortgage companies, they'll just issue a pre-approval letter. Oh, they did a mortgage. Not saying everybody's like this, but so I'm going to walk in a bank. They'll do a loan application. They'll say, I make this amount. They'll leave with a letter. They'll send it to their realtor. Oh, I'm approved. They don't even know what their numbers are. Maybe they didn't go off a closing cost worksheet or a fees worksheet. They go out. They go into contract on a house. They're 2 weeks down the road. They get a call from the underwriter. Bing, bing. We're having an issue with your debt-to-income ratio.
Yeah.
Your income doesn't support the payment. Well, why? I don't know. The loan officer didn't estimate the taxes or the insurance properly monthly. Because everything in the mortgage world goes off monthly income
Right.
versus monthly debt on the proposed house that you're buying, plus any debt that's on your credit report. And you divide that number, we come up with what's called a debt-to-income ratio. So if you don't fall in a certain criteria, the loan goes over that debt ratio threshold and DU won't approve it. You can't. It won't fly through Fannie Mae. It won't fly through Freddie because you're over the certain threshold. And the only way to overcome that is A, adding more income to the file, B, paying off more debt, or getting lower quotes or better quotes. So now you're backpedaling. You're in a file. You think you're closing on a house. 3 weeks down the road, underwriter's calling. You obviously got a problem. You're upset. Your house is packed. You're moving. It's a nightmare.
And they can't qualify.
And they don't qualify. So then I get a phone call,
Because
right?
the lender didn't do their job up front.
Correct. And then I get a phone call. Hey, we're running into this issue at a deal with this bank, right? Can you help us? I'll tell them, send me over everything. We'll look at the entire loan, right? And we'll see if we can rescue the file and save that deal so the borrower doesn't lose their deposit and they can close on their house.
Wow.
And we're under the gun all the time. I mean, we've gotten loans closed from application to CTC to closed in like 5 to 7 days.
So this is another thing I should touch on because a lot of first-time home buyers don't know this. Let's say that that's the case. Mike Jones, right? First-time home buyer goes to a regular lender who gives him the runaround. Hey, yeah, you're approved.
Right.
He goes through the process, issues a pre-approval letter because he's not experienced like you, because there's a gazillion of them.
Right, sure.
And 2 weeks before the closing, the lender finds out that he doesn't DTI in according to what you say.
Right.
Well, that borrower is in panic mode, and that's where the rescue loan comes into play.
Correct.
Sometimes the borrower don't realize that they could just go to you. Is that mortgage broker on the hook for anything or no? Can he just...
Not really.
So that's it.
Yeah.
So Mr. XYZ, Tom Jones from ABC Mortgage, you blew it. Now I need to go for a rescue loan with Angelo Marino or Fairway.
Right. And the pressure's on for me.
And they walk away because they didn't do their job right at the beginning.
And another important thing too is that they'll blow their loan commitment dates. So, once the bank blows a loan commitment date and there's no extension, if the borrower goes over that loan commitment date, their deposit is at risk.
Wow.
So you got to be very, very cognizant of your inspection dates, your loan approval dates, your closing dates. So right when we get a contract, going back to the purchase contract, right, when we get an executed contract with our buyers, right, from a buyer and a seller, we're going to put all those dates in our computer system right away. So we're going to be making sure we're targeting and hitting all those dates at the end of the day.
So what happens if there is no contract and they're just getting pre-approved? Now they have to shop for something, right?
Right. Once you're pre-approved, we can actually send your loan without a contract. And this is another stage of a full underwrite at Fairway, what we do, and a lot of banks don't do this. So we can underwrite the entire loan. We'll send the client a loan application.
Without a subject property.
Without a subject property, TBD, to be determined. We'll send it to our underwriting team, underwrite the entire loan, like there's a property there, based on a purchase price, a certain purchase price, taxes, insurance, PITI, everything. They'll look at all their docs. We'll get a full-blown written pre-approval letter from our underwriting team with conditions on it that basically says that is we can meet all these conditions, we can close on your loan. So when you go to put an offer in and you're competing against 3 or 4 different people, we have that approval done for you already. It's golden, right?
Right.
We're going to call the listing agent also and say, we have all their information. Loan's been looked at by an underwriter, not just me and my team up front, but an underwriter from Fairway. And here's the approval. So that pre-approval is basically just as good as cash at the end of the day.
Stay within those numbers and they're good.
Correct. And Fairway has another level of pre-approval letter. It gets even better. They call it the cash guarantee. So they'll underwrite the entire loan without a subject property, meet all the conditions, clear all the conditions. Takes about 7 to 10 days to get this done, right? We'll underwrite the entire file, clear all the conditions, and Fairway will write an addendum basically stating that if the buyer doesn't close for whatever reason, we will buy that house for cash.
Wow.
So the seller's getting a cash offer at the end of the day.
Wait a minute.
It's called a cash guarantee.
So Fairway,
Our company,
puts their reputation on the line.
correct.
That says if our lender didn't do their job
Correct.
and there's a hiccup on our end,
Right.
we're going to buy that home for cash.
Yep.
But what about the buyer? He doesn't get the house? Or are they going to buy it cash and then they're going to lend it to the borrower?
Let's say the buyer lost his job before closing.
Oof.
And it could happen, right?
Sure.
Fairway's going to close on that house.
And then they're going to turn around and
And then we're going to work something out with
work
the
something out
buyer.
with the buyer.
and
At least
get-
the buyer's not going to lose a house.
Correct.
Wow.
Correct.
So the poor schlep lost his job.
Right.
Fairway's going to say, "Listen, Mike, things are bad. I know you lost your job. We're gonna take care of it for you. You can't qualify no longer, but we're gonna buy the house for you. We'll work something out."
Correct.
Wow.
So we actually have an addendum that Fairway signs, our corporate and our legal department signs, and says that it goes with the purchase contract that states that in the event that the buyer doesn't qualify for whatever reason, we'll close and buy that and pay for that house in cash.
That's impressive.
So it's basically a cash offer at the end of the day with a buyer attached to it. And I don't think they've executed one time where they've had to pay cash for a house. That's how confident they are in their underwriting department. And they know when they put that addendum out, what are the chances that that could happen? Slim to none. Could it happen? Absolutely. But they're willing to put their money behind the deal and state
That's why
that
everybody needs to call
they'll
you.
pay cash. Right.
A lot of people listen. Everybody, again, I've been around the game, obviously, forever.
Sure.
So a lot of people, call my mortgage broker. I did one with you.
Right.
I actually did one with you where the buyer, I had a friend of mine, buyer, went to another mortgage broker because everybody's in their ear, and they blew it. They couldn't do it, and then I gave it to you, and you closed it.
Right. It happens all the time.
So just don't even bother listening to anybody. Just listen to this podcast and call you.
That would be great.
That's
Anywhere in the state of Florida.
I mean, really, you're on here explaining it, so they have to.
Right.
There's no choice.
No, I appreciate that. We work really hard. Like, literally, it's a lot of work doing mortgages, right? You're dealing with 10 or 15 clients all at the same time trying to buy a house. We're always available 24/7,
Yeah, I know. This
365
kid
days a
answers his
week.
phone 24/7.
You have to answer the phone. You have to be there. Realtors are out on the weekends looking at houses. Clients are out on the weekends looking at houses. And I'm not to say that all I do is work. I like to go offshore. I like to fish. When I'm offshore or I'm doing something that I'm out of cell phone range and I'm taking time off, my team is available. It's on my voicemail who's taking calls that day, and they will be there to help you. So if I'm not available, somebody on my team will jump in and get it done.
We should name this podcast the First Time Homebuyer Podcast. They should listen to it in the car. If they're thinking about buying a house, they should listen to this whole thing.
Yeah, that would be great.
So they can understand it.
There's a lot of education that goes into it. There's a lot of upfront learning that goes into it. And the right information, right? Because there's a lot of bad information out there. And you're going to talk to a professional, you think you're going to talk to some professionals on the phone, and they're going to steer you in the wrong direction because they're doing it for their financial benefit at the end of the day.
True.
And we're going back to saying how much work this business is. Literally, it's a lot of work. Like, it's non-stop. There's always something to do.
And you have a team behind you that helps.
We
That's
have
why you can't do it yourself.
Right.
It's impossible.
There's no way.
Right. No way.
We have a whole team. We have a whole team working on loans, and they make me look really, really good. And I encourage anybody to just Google my name and Google Angelo Marino Mortgage, and my name will pop up, and you'll see all the 5-star reviews, all the information about Fairway. There's really not a bad thing out there. Yeah. And my reputation, you know, it's important to me that every single client is taken care of at the end of the day.
Yeah, whether you're a first-time home buyer or an investor or a second home or whatever the case may be, is what you don't realize is you need a good agent, but it doesn't start there. I mean, just stop there. You have to have good lenders on your side. If you don't have good lenders, you're in trouble because you are getting them the money. And at the end of the day, if they flop, they could lose a lot. Not only could they not buy the house, they could lose a lot of money and it falls through.
Sure.
You're over that commitment period, and their money's on the line. You're out of inspection period. You're out of financial commitment, right?
Right.
Financing commitment. What's it called?
Yeah, the loan approval period.
Loan approval period. But now something happens because the lender didn't do their job in the beginning. That's a problem.
Yeah, it's a domino effect.
And whether it's first-time home buyer, investor, anything, it doesn't make
matter.
a difference. If
Right.
the lender doesn't do their job right and they basically make believe that they're pre-qualified and something comes up at the end, no problem.
So we help homeowners get in houses all the time, every single day. It's what we do. We're dedicated to it.
So I had a friend of mine, again, another story, buying a second home. Did I tell you about this one?
I'm not sure. Is it recent?
Within the year, probably. About a year.
Okay.
So he went into contract. I tried to get him to call you, but he didn't because a realtor was pounding him. You got to use my guys the best.
Right.
Well, to make a long story short, it was a second home that him and his wife were buying. They waived the inspection. They didn't care about the inspection. They looked at the property. The realtor told them to waive the inspection, which is not a problem. It's fine. And they didn't waive the financing commitment period. They obviously were in that time period.
Right.
Now that time period expired. Second home, 11th hour, maybe like a week and a half before closing, they couldn't get approved. And it wasn't their fault.
Right.
It was the lender who didn't do their job to dig up that something popped up, boom, at the last minute.
Yep.
And they lost their deposit.
Yep.
So the sellers were so aggravated that they wound up going after the deposit and they got it.
I'm sure.
That's a problem.
Because they passed the loan commitment period. Like, they could have called me and I could have tried to go in there and rescue that deal.
And the deposit wasn't little.
I'm sure.
It was a lot.
Yeah. Knock on wood.
I think they may have tried to hire an attorney to get it back.
Right.
But then I think they may even be in that process, but that's not going to happen. They're not getting it back. Not only is that a headache, even if they think they're going to recover it, by hiring an attorney who's going to take money to fight for it, they're not going to get it back. And then they lost the property and they're just aggravated. So they're not even buying anything right now.
Miserable experience.
Yeah, miserable.
Yeah. That's the worst thing that can happen. But you know what? It happens all the time and nobody talks about it, right? Nobody says, oh, like, you don't hear about that. Those people the sellers are pissed. The buyers are upset. They lost financial money, time in the deal. Those sellers had to keep that property off the market for that amount of time. Then they had to put it back on the market and find other buyers and then go through this whole process with somebody else again.
And you know what's funny is they all blame the seller.
Right.
It's not the seller's fault.
No, why would
It's
it be
the lender's fault.
100%.
Yeah. The sellers are this, the sellers are that. So that ain't the seller's fault.
They missed it.
That's your lender's fault.
They missed something.
Yeah.
And if they were self-employed so there's a line item on the tax return on number 13.
I think they were self-employed. Well, I know he is.
So self-employed is a whole nother ballgame, right? When it comes to self-employed borrowers and tax returns, right? Because we have underwriting guideline worksheets that we extract all the information off a business tax return and a personal tax return from a client and put it into Fannie Mae's underwriting worksheet. That's what underwriters are going to go off of. We're going to take all that information up front and put it into that worksheet. There's a line item on Schedule L, right, of a business tax return. That's number 13.
That gives me stress.
That says, right, notes payable and receivable less than 1 year. If that has anything on there, let's say it's a $200,000 notes payable, receivable less than 1 year, Schedule L, number 13, right? That goes against the borrower dollar for dollar against their monthly debts.
Wow, so somebody could miss that.
Easy.
Maybe that's what happened.
You never know. I just had a deal that came across my desk. We're doing the upfront pre-approval. She had $336,000 on Schedule L. I said, what is this? She said, I don't know.
Ugh.
I'm going to have to ask my CPA. I said, you know what? We can't go conventional, but this property qualifies for a DSCR. We didn't even have to do a conventional loan for them. It was a rental property. It worked out perfect for her.
I'm wondering why my buddy couldn't flip it to a DSCR if he would have called you.
Second home, you couldn't.
You know what? He was so aggravated that he just was.
Right.
He was just angry at the world.
Right.
He wouldn't even give anybody a shot. At that point in the game, that deposit was gone. It was like literally a week before closing.
Yeah.
And
we would have had to get an extension, and I would have had to get on the phone.
Yeah, I don't think they were looking to give an extension at that point.
Right.
It may have been, if I'm not mistaken, I don't know, but I think they already got an extension that still blew up.
Oh yeah, that's a problem.
Yeah.
Yeah, I just heard a nightmare story on a deal that got CTC'd. I didn't do the deal. They got clear to close CTC a day before it was supposed to close, and the mortgage company had 75 days to get it done. And this guy worked for Costco. Like, I mean, how'd you mess that up? And the guy supposedly he's a waiter. They didn't know he was a waiter during the day.
God.
And, you know, they couldn't even get him on the phone at lunchtime because he's waiting tables. So you got to be careful who you're working with. People want to do business who they know, like, and trust. Nothing against waiting tables or waiters, but if you're going to work in a restaurant and you're in the mortgage business, you probably should do it at night.
Yeah, I agree.
Outside of business hours.
And that's another thing. People want to do business who they know and trust.
And like.
The problem is because you know and like and trust somebody, if they're not experienced, forget it. You can know them, you could like them, and you could trust them.
True.
Big deal. If they're not experienced, mistakes happen. But that mistake could cost you a ton of money.
So you know when,
and that's what happened in my situation.
If you apply for, let's say you own a restaurant and you apply to U.S. Foods for a credit account, right? They're going to ask for 2 reference letters for vendors that you do business with, right? All these big distributors do that. So what is better than a reference letter?
Right.
What is better than past client reviews? Go look at my past client reviews. Look at testimonials from people that actually went through the process with me. If there was bad stuff out there, they would say bad stuff, right? But it's just not out there. So,
yeah, I mean, I'm a testimony myself.
Yeah, yeah. I mean, you have to live and die by the sword, right? At the end of the day.
Yeah.
When I say your loan's approved, it's good to go, I made sure that we look through everything, right? Wow. And if you want that second level of review, send it to my underwriting team. Let them review it. Underwriters, at the end of the day, are the decision makers. We're not the decision maker.
Right.
We do our best and put our best efforts in approving that file up front, right? And
well,
reviewing
you know
everything.
What to get. You know what to look for.
100%.
You know what to gather if they're missing anything, and then it goes to underwriting. There's pretty much, once you're on the file, their underwriting job's pretty easy.
Right. I'd rather let an underwriter look at it too.
Course,
so it's another set of eyes. So Ashley, my loan partner, she's going to look at it. I'm going to look at it. That's four eyeballs on your file.
Yeah.
Underwriter looks on it. That's 6 eyeballs. And my processor, that's 8. So you have 8 different eyeballs looking at that file, which is 4 different people, right? So you have 4 people that reviewed all this stuff. Out of the 4 people, somebody's going to find something if there's something there. Why not have that extra level, right? And do the cash guarantee. Who cares? It doesn't cost the borrower $1 to apply or to do the cash guarantee or to have the file underwritten. It's just time at the end of the day. You know?
So we're definitely going to be talking about this more. But for somebody who's listening to this, maybe in their car or wherever, how do they find you? And then we'll wrap it up because it's super important that they just decide to go with you right away, right off the bat. Just call you.
Yeah.
How do they get to you?
Absolutely. So they can just call me at any time. My cell phone is 954-701-0268. Or you can go to www.marinomortgageteam.com. www.marino, M-A-R-I-N-O, mortgage spelled out, team.com.
Awesome. Well, there you have it, boys and girls, ladies and gentlemen. Anybody who's looking to buy a house, there's no further. That's it. Stop it right there. Don't even bother. Don't even listen to your realtor. Don't listen to your anybody. Trust me when I tell you, just call Angelo. If your realtor doesn't know him, tell your realtor to call Angelo and they'll work from there.
I appreciate that.
Yeah. Yep. So I think next episodes, maybe they'll learn, they'll be in their second home now because you already got them approved on the first, and they'll want to listen to how to buy a second home.
Yeah, that'd be great. Yeah, absolutely. Whatever we could do.
Call Angelo, and then that's it. We'll wrap it up here.
Thanks, man. Appreciate it.
Thanks for having me.
Yep. Absolutely.
Thanks for having you.
Thanks for having me on. Yeah.